Hello, and welcome to Rocket Fuel, your daily update of everything that's happening in the Rocket Pool community. My name is Wack. Today is August 14th, and today's episode is going to cover Rocket Pool and Ethereum news because Anthony Sassano is on vacation. So I'm going to step up for the next 10 weeks or so. So I'll be covering more Ethereum news and Rocket Fuel every day. But today's episode is going to be covering some talk about timelines for like Legos and ETH only validators coming for Rocket Pool. We're going to be talking about some things that you can help with Rocket Lend. And in terms of Ethereum news, we're going to be talking about the ETFs. We're going to be talking about Optimism superchain. We're going to be talking about people using Ethereum and a whole lot more. So let's get started.
10, 9, ignition sequence start, 6.
So Maximus here in trading asked, I missed the last month of news. What's done in the short term to stop all the people from exiting their nodes and to attract node operators to spin nodes? AKA, how are we supporting Rocket Pool price, the RPL price in the short term? So I replied by saying the main thing is to tell people stop leaving their validators. Could be Rocket Lend. After that, we have ideas in ETH only LEB8s. You might have heard of NodeSet. Their Rocket Pool integration constellation is heading to audits next week. So then I gave a timeline. I said Rocket Lend might be here in about 3 months. ETH only validators and constellation from NodeSet are around 4 to 6 months out, maybe. And then here, Halulu replied by saying if ETH only validators take 4 to 6 months, that would be pretty bad. I said, how long do you think everything would take if it goes smoothly? And I said, I'll update my mental model accordingly. And then Halulu replied by saying it could be done in 2 to 3 months. So maybe 4 more weeks to agree on specifics and write some RPIPs, and then a month for the governance process, which depends on the hotfix as well. So the team needs to do like hotfix on the contract, and maybe they can tweak some values within that hotfix. And then Noshua replied by saying, I'm hoping 1 month. The hotfix is the unknown. So Halulu says, isn't sentiment plus vote a month on its own? Or do you want to ask for the 1 week minimum to get it done faster? And he says the sentiment and vote takes 28 days. And basically, he says if it could be 2 months if we do a month being exactly 30 days. I was more thinking RPIP in a few days and pass the vote in a month, which could also be 35 days. So it could be as soon as basically 5 weeks from now that we could get the ball rolling on this. But it could be as much as a couple of months according to Halulu, and maybe a tiny bit more, like 2 to 3 months. So this is actually like a very, very interesting development that's happening, and it's going to make things really interesting to see how it goes. And there's still details that need to be ironed out. So let's have a look on the ETH only validator thread, and we see that Langas actually gave some feedback yesterday. So Halulu asked a question about dynamic. He made some points about dynamic commission and how that's different, and how with the current tokenomics, RPL value is not a function of TVL, but that TVL is a function of RPL value. It says intrinsic value is fixed in that 1 ETH worth of RPL unlocks solo staking yield of 1.4 ETH. As long as this intrinsic value and other source of value such as governance power are enough to make people want to hold RPL, TVL will go up. If it's not enough, TVL goes flat or even decreases, as we're seeing now. So Langas replied to this message, and he said that Halulu said the intrinsic value is still here with dynamic commission. So Langas was saying, like, how is this so? There are 2 parts to the intrinsic value. There's the RPL requirement plus the RPL yield. He says with dynamic commission, you have removed the requirement. RPL is only attractive as yield if it earns more than ETH does. I may be wrong, but I don't think that's the case with dynamic commission and parameters I've seen so far. RPL is certainly a bottleneck for TVL, but dynamic commission in that form is making a huge trade-off, one that Saturn spent time and energy trying to avoid. Noshua replied by saying RPL may be as attractive as yield even if it earns less than ETH does. RPL may not be attractive as yield even if it earns more than ETH does. So we're going to break up that comment in a few seconds. Valdorf also commented on replied to Langas before, so let's go and see what Valdorf said. He said the big thing about thinking about state once Saturn 1 hits, would I as RPL holder prefer to have the previous time period capture more TVL using ETH only stuff or not? And he says, to me the answer seems yes. So this is what we were talking about on Rocket Fuel and Weekly Orbit before, is that we want Rocket Pool to hit the ground running with Saturn 1, and the idea is right, like with Saturn 1, we have the value capture mechanism, whether that's buyback and burn, whether that's voter share, whether that's buyback and liquidity providing. With all of those, if our TVL is low going into that period, we won't be able to show much off for that. We'd have to wait for our TVL to grow, which is then we can capture value. However, what I think Val is talking about here is like, if you have the TVL to begin with, then once you activate those fee switch, whatever form it takes, you can really make a big impact right away with the value lock. So there's some interesting ideas from Val there, but Langus here says RPL holders would favor RPL Rocket Pool having more TVL before Saturn, but at what cost? They're around 4.4 million RPL that is not effective at the moment. Some may be over collateralized, but much of it is under collateralized. Without a substantial driver to keep the RPL staked, it would be sold on the market, tanking RPL in the short term. I don't think forward pricing helps us here. I think we need to have the components in place. I'm under no illusions that Saturn migration would be smooth, but it has a better chance than this temporary solution. So Langus goes on to say, I totally agree about the cliff, and I'm in favor of removing it entirely to reduce its effect on TVL. So that's the 10% cliff. So that's people who stop getting rewards when RPL goes below 10% of their collateral. So Langus is interested in removing that. So here, Nosho explains his comment right about the yield, and he says, I'm saying that only looking at RPL yield component is irrational. He says, if I get 2 times the yield on RPL compared to ETH, but my principal is down 70% compared to ETH, that is not attractive. I would be much better off with ETH. If I only get half the yield on RPL, but my principal doubles in value, this is very attractive. Comparing RPL yield to ETH yield just isn't relevant. I think this is a really interesting point that Nosho makes, and I think that RPL's price volatility compared to ETH, even this in the pre-Atlas period, when the price was going up a lot, people noticed that the price changes for the RPL token is worth much more to them than the yield that they would be getting. I remember there was a point back in the P-ETH, NETH debate when I was making the point, I think mirroring points that other people were making as well, like Marceau, I remember saying that it doesn't matter if all the RPL gets staked, let them have it. Like what will happen then is the TVL will go up. The TVL going up will hopefully help the price of RPL go up, and the yield, going down to 3%, like being actually negative yield because part of inflation going to the PDAO, that would have lesser of an impact compared to the actual price increase, right? And I think that same idea exists now, with the prices being going down so much. People have noticed that, people have realized a long time ago that their RPL value going down has a much bigger impact on their portfolio value than the 5-10% yield that they will get on the RPL token that comes from inflation anyway. So here Langus said every asset has different price variability, and people expect more yield from more risky asset. To take this into account, the risk the non-ETH asset will always be more volatile. It's relevant because when you offer ETH only, people have a choice and they will evaluate returns and their speculative risk appetite. Value flowing from TVL to RPL proves more attractive foundation for that evaluation. And Nosho said, yes, value flowing from TVL to RPL is a thing as soon as Saturn 1 vote passes. The argument is that RPL requirement kills TVL and thus makes RPL less valuable. So this was actually like a discussion that went back and forth. Langus replied to Samus and others as well. And I think what's happening here is that the answers from the people who are supporting the ETH only validators are getting stronger and stronger. And people like Langus and even others are starting to shift their mental model. So here Langus as well is saying I'm not arguing to keep RPL requirement, otherwise I would not be supporting Saturn, but I want to ensure that we do not trade off TVL and destroy RPL value. So I think that's some of the ideas that Langus is kind of coming from. But Nosho says, I think it's pretty clear that we disagree on where RPL value comes from. I don't see a trade-off between TVL and RPL value. It's the same thing. I don't believe keeping the RPL requirement around has any chance of being positive for RPL value. And I guess, there's a chance that this might be a more divided vote than the Saturn 1 vote was. If it comes to vote, the RPIP I think is going to be really important, and I think the people in this thread are still kind of hashing out some of the details about what the commission structure will look like, what the cliff will look like, all of these kind of things, and there's still some questions I think that people need to agree on before we get to a place where an RPIP is ready. And I'm sorry, I'm sure that I'm missing out on some details in the discussion. Like Halulo's response here was actually a really good one about the token value. There's just too much going on in this thread for me to like stay on top of all of it, but I'm going to try to keep giving you updates of this once we get to the the RPIP stage and there's discussion in the forum going on about this. I think at that point we'll it'll be a lot easier to communicate a unified message, but people are still, there's a lot of different discussions going on at the same time right now. One of them is, what will the RPL cliff look like below 10%? Will people start getting rewards? Another is, what will the commission look like for people who provide ETH only? And what will it look like if they provide some RPL instead of no RPL? And then another thing as well is like, should we even do this? How is this going to impact RPL price in the short term? Valdorf actually, like I should mention Valdorf's reply here to Langa's. So he said a couple of things. We haven't talked about changing the withdrawal threshold. So under collateralized nodes simply can't market dump. So this is an interesting point because right now, your RPL is locked below certain collateral percentages, and to get access to the RPL, you have to withdraw your node. So people can do that now as well. They don't have to wait for these changes to happen. Val says, if you don't believe in the asset medium long term, holding it for a few percentage yield isn't rational. So the idea is like, if RPL is going to continue to crash more and keep going down in ratio, then the rewards that you would get from ETH or from RPL staking is going to be insignificant compared to the amount of value you'd lose to RPL. And then he says, while yield can help swing a near tie, that's all about it can do. Yearly yield is roughly the size of RPL's weekly swings. So routinely RPL has weeks where the ratio swings more than 10%, and that's about what yield is right now for RPL. And then here Valdorf goes on to say folks can already dump if they don't like RPL. They have to exit fully under the dynamic commission idea. They have to at least exit and re-enter with lower ETH commission. And Val goes on to say, since folks moved by the difference in those costs would be exiting, the question is, do we add more value from additional TVL due to no RPL requirement? And he says, I think the answer is easily yes, but this is something that we can only guess about ahead of time. And then for the TVL before Saturn, Val says this is an interesting point. I think TVL in Rocket Pool is quite likely to migrate, and recently added TVL in Rocket Pool is even more likely to, in my opinion. And the incentives are big, so not being aware is likely the main reason not to. And someone that recently interacted is unlikely to fill that bill. Yeah, so people who are taking part in Rocket Pool now and seeing what's going on, they'll be aware of what's coming next, and they'll be much more likely to adapt in accordance with that. So that's very interesting stuff, and hopefully we'll have some firm direction from the community in the next week or so, maybe next 2 weeks, and then there'll be 4 weeks of governance that we'll have, which will be really exciting. So like I was saying, another thing that's really exciting here is Rocket Lend are getting to the point where they are working on their testing suite, and I think they want to do this for the next week or so before audits start. So Matt here is kind of the project manager on Rocket Lend, saying, calling all cars. If anyone has the skills and the time, would greatly appreciate feedback submissions to the test suite as well in the run up to the audit. And then there's a link to the GitHub with the tests, and people have already started applying with some ideas. So we have non-fungible Yoakum here, and Epinef, of course, who's been involved in this with this a lot recently, which is really cool. Halulo, Nosha was involved before. Shakedown here says, sorry, I was supposed to look at the test suite, but some in real life stuff has come up that's going to keep my headspace occupied over the next couple of weeks. So sadly, he won't be able to help as much, but other people are getting involved, which is really cool. If you do have some time, if you have some motivation with this, please get involved. Every little bit will help. And the Rocket Lend guys want to go to audit in the next few days or maybe weeks, and if that's the case, then you can help a lot in this time. So please do help. Okay, we've got some news from Sigma Prime here, who have the Lighthouse client. Of course, there's the consensus-led client Lighthouse, and they're saying they're about to become more efficient and resilient Ethereum consensus client thanks to a big update 2 years in the making. It says check out this hot off the press article to learn what, why, and how. So they've got new tree states. This is explained like on 5 article part 1, and this is from Dap Lion as well, kind of explaining how it works. So they're saying that the memory usages are going to go down significantly, and it's going to be a much better client. And this is an update that they've been working on for a long time. So if you're interested in this, if you use Lighthouse and you want to see what's going on with Lighthouse, definitely give this article a read. And I think this update will be coming out soon. I'm not sure exactly when it is, but yeah, it says this feature is close to ready and is coming soon, targeting Q3 2024. So I think they've got test version out there, and they said that this is experimental. Please do use at your own risk. So make sure that you use it at your own risk, but this is actually really, really cool. So I'm looking forward to this Lighthouse update coming out. And Lighthouse, of course, are I think for a while they were the biggest consensus-led client. It's actually gone back to Prism now with 36%, but Lighthouse at 29.99%. So that's looking really good. We know the consensus layer distribution, client diversity is looking good. If we can just get Prism down a few more points and a few more points to Lighthouse, I think that would be really, really healthy. Okay, next we're going to be talking about the Ethereum news. So this is, to cover Anthony Sassano being away, and in spirit, I'm wearing my Daily Grey shirt today. So to keep the spirit going, So it's not quite the same as what the kind of stuff that Anthony will cover, but hopefully, or Anthony normally covers, but hopefully it will be enough to kind of keep you up to date with the big things that are happening on the Ethereum side of things. And of course, one of the big things recently is the ETH ETF, the spot ETH ETF that's gone through. Well, Farside here are starting to talk about some interesting things that are happening for the first time. So one of the things was we had a zero flow day for ETH. So this is the Grayscale trust that was converted to an ETF. A lot of people were leaving that, and there was 13 days of continuously people leaving it. But a couple of days ago, they had zero outflows for the first time, which it actually took Bitcoin, I think, 60 days to reach that level where there was zero outflows. So this kind of ties into the idea, that people were saying that the outflows for the ETH were harder and faster, and because of that, hopefully they'll finish sooner or level off sooner. And it looks like that's what happened a couple of days ago. And then we got some more news as well. This is from yesterday about there being positive flows. And this is actually really interesting, and a lot of people have started talking about this. But if you actually look at this Farside website, that's a really good database for this information. You'll see that the flows have been getting more positive each day, and the negative flows are actually getting less impactful. So from August 1st, we had 26 million, then 54 million outflows, 48 million inflows, 100 million inflows, 23 million outflows, 3 million outflows. We had then 15 million outflows, but then in the last couple of days we'd had 5 million and 24 million inflows. So it's looking like the flows are getting more and more positive, which is actually really, really great to see. And of course, this hasn't gone unnoticed by people analyzing this. So here Arkham say that ETH flows now positive. So this was over the course of a week. So weekly flows for ETH turned positive for the first time ever, with a net 31,500 ETH, which is 75 million purchased last week. So inflows were led by Blackrock, who have accumulated 168 million in that time. And if we actually look at the Blackrock numbers, they're close to $1 billion now. If they have another good day of inflows today, which is the 14th, they could hit $1 billion in assets under management for them, which is actually really cool. But people are starting to notice as well now, here, look, people are paying attention to the ETH outflow. Says this is an important week. If this week is a positive net inflow week of more than 50 million, I think we're at the edge of having a strong upward trend for Ethereum ecosystem. And what happens, is that the sentiment shifts. People will start realizing that, the Grayscale selling is done now. The prices have gone down a lot compared to when the ETF launched, from like 3,500 down to 2,100 last week, and now it's at around 2,600 basically. But this is maybe showing people that this is a good entry point now, where you don't have to worry as much about Grayscale's outflows, and what instead you can worry about instead is with the inflows now coming in. That's what you can focus on, and that's going to be quite impactful on ETH. And here as well, we have an update from Watcher Guru. So this is companies filing their quarterly reports, and this is DRW Venture Capital discloses $150 million Ethereum ETF holdings. So these institutions are getting in now on it as well, and they're actually building up sizable amounts of ETH. And this is actually really cool. So people are saying this is just the start, and I think this is the point now where this inflection point, where this week has been the point where people have stopped like flooding ETH and talking about how the outflows are overwhelming, the price is going to go down. And I think they're starting to see now that the inflows are starting to overwhelm the outflows, and hopefully this will be the beginning of a longer term trend where inflows will start to actually impact price. And people were hoping that the damage would only be a couple of weeks, and that's what it looked like. It looked like we had a couple of weeks of quite bad weeks basically of outflows, and then with the macro factors, the price went down really significantly. But that just goes to show you that it might be a really good point now, entry point for people to buy into ETH. And here with Leon says that the Ethereum spot ETF initially experienced some significant outflows, but recent data shows that the outflows are stabilizing and the inflows are starting to increase. This is a positive sign indicating renewed confidence in the market and adding some buying pressure to ETH. So here you can see the yellow line is the chart of the price, and the flows are shown by the red and the green, and you can see that the red is getting smaller and smaller, and hopefully the green is now going to start to grow. I honestly feel like we're going to end this week quite strongly with inflows, as people start to realize that we've reached this inflection point and things are changing now. But I'm definitely going to be keeping a close eye on the Farside website, checking it every day pretty much. And I know Anthony was saying that he's only going to be sharing ETF data once a week, but I might be looking at it a little bit more frequently, so sorry about that. Okay, and then here Matt had an interesting point. He said that ETH ETFs have now accumulated more inflows than BTC ETFs over the last 11 trading days. With ETH outflows gone, ETH is crushing expectations. Analysts first expected 10% of ETH inflows, then they corrected to maybe 20 to 30%. Now ETH is straight up beating BTC. So I think we'll see these short time frame changes, and Dude replied by saying, no, this is cherry picking narrative at its finest, but that's fine. I think it's okay to kind of set narratives sometimes to present a picture. Of course, the real analysis of this will be done on longer time frames, over the course of months and years. But I think it's okay to do what Matt here is doing to build a little bit of hype, build a little bit of momentum, and show that the ETH ETFs are actually performing quite well, and that it's only a matter of time before this starts impacting the price. Okay, next we have some really cool news coming out of the Optimism ecosystem, and Optimism are saying that the superchain is becoming one, and will be bringing a unified experience for transferring assets, building apps and UX with chains or apps across the superchain. So for those of you who don't know, Optimism is a collective of companies, and they have the layer 2s. So you have things like the OP chain, you have Base, you have Zora, and you have others that are part of this. And what's going to happen is they are now going to have the interoperability, and the stuff that we have heard for so long about fragmented liquidity, etc. They're starting to bridge it across the OP chains, which is actually really exciting. And here they've got the information how it's going to do. It says today we outline a path to bring interoperability to the OP stack and across the superchain. So they're going out with the DevNet, and then this is going to roll out with a message passing protocol and the superchain token standard and fault proofs. After that, you'll have the testnet. So this is live along with dev tooling and native interoperability integrated into intent and messaging protocols. And then for mainnet, it's going to go to native interoperability on mainnet. Assets and apps can be accessed in 2 seconds within a single block. So that's really cool. And then they're saying that their vision for native interoperability is to make assets, data, and users accessible from anywhere in the superchain, fungible and portable. So this is going to be really great for building those bridges, but happening at the protocol level. And it'll just unify that liquidity a lot more. And this, of course, is in line with what Polygon are doing with their AG layer, and what ZK Sync and Arbitrum are doing with their chains as well. So I think what will end up happening is you'll have a whole bunch of these L2s. I think like potentially hundreds, if not thousands, but most of them will be factoring into like one of these like super chains of sorts. I know that's the OP language, but then they'll have like liquidity will be fragmented, like whatever, but for most users, they'll be getting a big chunk of that across these bridges, which I think will be really awesome. And like Vitalik said a few weeks ago, right, this is just a matter of months away. This is not, an unsolved problem that like people are really struggling to solve. This is getting to the point where it's going to be really, really great. So another area of FUD that's coming from other ecosystems, talking about how, L2s have fragmented liquidity, etc. That is going to be going away, I think, very soon. And I think that's going to be really cool. And next, we're going to be talking about Ethereum users, and there are a few people who've been making kind of putting out data about this, and it's really interesting. So Amin here says that this analysis omits daily active users. So he's actually replying to information from I think Marty Party, but that's here it is. So Marty Party says that daily active blockchain users for 11th of August. He says invest accordingly, right? So it's showing Solana at 1.6 million, BNB chain at 750,000, base then at 750,000, a ton at 400,000, Sui at 346,000, Arbitrum at 344,000, and then Ethereum at 320,000, Aptos and Cardano bringing up the rear. And what's really interesting here is that I think people can use these narratives to spin information the way they want, right? Like first of all, daily active blockchain users as a metric is as a flawed mechanism when you take it on its own, right? Like, because for a lot of these chains, transacting is much free, spinning up wallets and accounts is free, and you can spam as much as you want with very minimal cost in order to boost your metrics. Now, I'm not going to accuse any blockchains of doing that directly, but I think there've been some interesting piece of data that kind of show you just how much that's happening on other blockchains. But what's interesting here is Amin's reply by saying that daily active users on rollups is actually part of Ethereum statistics. So when you include when you separate base, Optimism, Arbitrum, what you're actually doing is you're misrepresenting the information, and that should all be one. So he says Ethereum surpasses any blockchain in daily active users when those numbers are combined. It says these figures only account for write access daily active users. The chart does not consider read access as form of activity. Ethereum, through both raw accounts and on-chain rollup protocol accounts, constitutes the majority of TVL in DeFi, which very likely means a user base that frequently reads the chain to monitor their portfolio balances. So here, if you have a look at the daily active users, they're just from Arbitrum, Optimism, and Base, they are like close to 2 million, basically like 1.6 million, and that's not counting Ethereum as well. So there's a lot of manipulation happening with this data, but when you look at the data, it really paints an interesting picture. So looking at transaction count here, you see that layer 2s are reaching new all-time highs, and it seems like they're going up and to the right. So Grow the Pie here says let's get Ethereum and watch the pie grow, but they're showing that daily weekly transactions are up to like the millions now, which is really cool. And then here we had some more information from admin saying that Ethereum mainnet processed a record 13.5 million transactions in a single day, with 1.1 million raw transactions and 2.4 million through on-chain rollup protocols. And it's just showing you how many transactions are going through. And every day it seems like we're breaking new records. So that was a reply to a tweet from the previous day saying that the record was 14.42 million, but then they went up to 13.5 million. So this is really pushing those numbers, and it's just showing you that people are using Ethereum, but you have to kind of look past the surface level to really put those numbers together and get a full understanding of what's happening, because people will manipulate that data and try to show that their blockchain is performing better than Ethereum or is being used more than Ethereum, whereas the reality is something different. And here, talking about stable coins, like, this is one of the reasons why people transact. Layer 2s like Base now are going, trying to really focus in on the payments narrative. And if you have a look, you'll see that Layer 2s have more stable coins now than Solana and Binance Smart Chain combined, which are two big Layer 1s. And they'll say that it's got 150% more than Solana and 94% more than Binance Smart Chain. And this is information using DeFi Llama for their points. But Layer 2s now are up to 10 billion in stablecoin market cap, which is really amazing. So people are using these Layer 2s for payments. They're using it for all sorts of different activities like NFTs and social stuff. And it's really, really cool to see that Ethereum's growing so strongly. Okay, so once we get to these super useful L2s that people want to use, we need to make sure the wallet experience is better. And with the wallets, we'll get better experience through interoperability on these L2s. But here, Jesse, who is one of the lead developers on Base, Jesse says that I sketched out my dream wallet that would be 10x better than anything in Web 2 or on-chain today. Need to solve a bunch of hard challenges, but I think I can get there in the next 6 to 12 months. And on-chain is going to be 100% better than 100 times better than online. And what Jesse's doing here is picturing out what it would look like to have a wallet like this. So there'd be purchases, there'd be signers, there'd be the main account, and then there'd be spending, saving, others, and recoverers, and all of these things together would work to set up a wallet basically that people can use, and that would be a really great experience. And then he was saying that within this wallet you can bring in apps, you can bring in KYC stuff, you can bring in a whole lot of other things that will have everything in one place and make it like really amazing. And he's saying that if you are interested in working on this kind of thing, the Base team is hiring, and you can get involved in this. If you have those skills, bring them, because Base is doing amazing stuff and you can get involved in that as well. Okay, next we've got some, we've been talking about Layer 2s quite a lot, and we were talking about how all these different Layer 2s are going to come up. Well, Luke Youngblood here says, Token Terminal believes Blackrock is likely to launch an Ethereum L2 similar to Base. This would be a very smart move. So Blackrock and other institutional counterparties could settle on a fast, low-fee network. They'd gain access to $80 billion in stablecoin liquidity on the Ethereum mainnet and $300 billion in ETH, not to mention wrapped versions of BTC and Sol. And then on top of that, you can have access to smart contract systems that are proven product market fit, dramatically increased in security and safety in recent years. They're now able to secure $100 billion on public networks with nation state bad actors attacking them daily. This level of securing and programmability beats any existing electronic trading network. So what they're mentioning here is your safe wallets that you have, the multi-sigs, they are completely battle tested. Like I've got the vast majority of my crypto in multi-sigs on which are safe vaults. I'm on the Rocket Pool's GMC, the IMC. We put all our crypto in these. If you can break the safe wallet, you can have access to literally $100 billion of crypto, and that is the biggest honeypot in all of crypto if you can break those wallets. But they've been unbreakable so far. and hopefully will be forever. But that just tells you the level of security here is just phenomenal. And then Luke as well goes on to say state roots are settled on to mainnet for verifiability, but L2s are not entirely immutable, so mistakes could be fixed at the sequencer level. So that just gives Blackrock a little bit more assurances that they can fix that. And I think Luke says that I think this strategy is already being implemented, and wouldn't be surprised to see the Blackrock L2 launch in 2025. So what's happening here is like, you're seeing things like Blackrock bring their Biddle fund to Ethereum. You're seeing things like Franklin Templeton bringing their funds to Arbitrum, and you're seeing a lot of these companies kind of moving parts of their business on chain. Trust me, like they're peanuts compared to what will happen, right? Like I think BlackRock has $500 million or something along those kind of lines on Ethereum. Now, compared to their 10 trillion assets under management, that's literally like zero. It's a rounding error. But what's happening is these companies are seeing how these products work. They're seeing what information markets have access to, and they're also factoring the fact that these protocols are going to grow significantly in the coming years because they're pushing its growth, right? Like they are promoting them, they are using them, and that will bring more and more online. And with that, what we'll see is there being a need for these super institutions to make their own presence felt on Ethereum, and they'll do that through making their own L2s. Now, I think this cycle is the cycle of institutions making their L2s, with the next cycle being nation states making their own L2s. Once we're up to those million transactions per second, through these new novel designs of verifiability and settlement, you'll be seeing a whole lot more of that potentially happening in the future. And talking about apps that are used, this is Farcaster, and Farcaster are pushing the limits every day on the cool stuff that they're doing. And now they've got a new section on their app called Explore. So this is a new way to discover apps, actions, and frames. So it works on mobiles, and developers can submit their apps to be listed. So if you are curious about what kind of things people are building on Farcaster, you now have an easy place to go and see what's going on and how all these different apps are working, which I think is really awesome. So definitely check that out if you're on Farcaster. And finally, I'm going to end today's episode with this post from Ryan Sean Adams, who's kind of showing just how being on chain and being in crypto is changing and how it's getting easier and easier. So he says people are too glum about lack of crypto adoption. He says we've actually come a long way in a short time. So he's actually sharing the story of Bankless to get this point across. So he says we're a media company with simple business model, subscriptions and sponsorships. He says we now run 70% of Bankless on chain, and I actually love it. That's up from probably 20% when we started. So he says these are the things that we do in crypto. Okay, so their bank vault is safe, just like mine is, and they use Etherscan to get their bank statements, to check what's happening, their transactions in and out. They use MetaMask, Rabi, and Uniswap as their checkbooks. So those are their wallets that they're using. It says our finance people use these to send transactions from our vault or to make payments. Then they use USDC for their cash, so they settle salaries, bills, and taxes in fiat. So short-term treasuries in stable coins. Then they have SDAI. This is a yield bearing, so this is the equivalent of CDs and treasuries, and they use CarSwap for this to buy SDAI, and that's a real yield generating stable coin. And then they have ETH as their investment, so that's their S&P 500 index that they have. They use Rocket Pool for ETH yield, so they stake their ETH and get boosted rewards on that. They use Cryptopia as their QuickBooks, Uniswap for all the currency swaps, TaxHQ as their TurboTax to file taxes, and Kraken and Coinbase are their crypto banks, their fiat on-ramps. And then they have other things that are partially in crypto, and they use things like Stripe. They also have traditional banks with Chase and Mercury, since Bank of America kicked them out, and they have payroll with Gusto HQ. So they're saying that they're moving more and more of their business online, on chain. And, it's getting to the point now where you can run your whole business on Ethereum, which I think is absolutely amazing. So congrats to these guys for making those moves. And, if you have a business and if you're interested in moving your business online as well, services like Oculus, I think it's called Oculus, something like that. And others are there to kind of help you do that and manage everything as much as you can online as well. But on that note, I'm going to end today's episode. So thank you all for watching, listening, and being part of the Rocket Fuel community. Like I said, I'll be bringing Ethereum news to you for the next 10 weeks as well as Rocket Pool news. So check in every day for that information. And I think it's going to be 10 weeks coming up. So I'll see you all tomorrow. Bye.